We're back to Connected Farmer with our All About Commodities section with Mike Zuzolo, President of Global Commodity Analytics, and he's going to speak about the Fed decision, the blooming end of gridlock in the US Congress, and yet some information about trade and the energy policy. Right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, we have long talked about the gridlock, and seems that there will a stimulus bill is being approved, and yet the Fed decision related to interest rates, it seems that everything keeps the same on the interest side. How does that impact the farm?
Well, we're certainly going into 2021 here in the United States with an inflationary government leadership, but both from a Federal Reserve standpoint, assuring essentially the market, Luis, that they will not be in any hurry to raise interest rates if we start to see inflation. They've essentially said, don't worry about another taper tantrum where they raised interest rates very rapidly last year and cut the economic recovery short. But I think it was a responsible move by them to not allow too much excess debt to be floating around in the economy and the capital markets. And as you said, the fiscal stimulus bill appears to have gotten done. Expectations are for the Senate to be voting on that today, on Monday. And if it doesn't get done on Monday, I worry that the trade is going to not take that well at all, because the trade is banking on a very strong inflationary start to 2021. You and I have talked a lot about the weaker dollar and the stronger crude oil prices, and how much I feel like that analytically that is a very good and probably the best indicator right now as to how inflationary the trade feels for both equities and commodities. And we've seen new 9-month highs in crude oil. We've seen new 2.5-year lows in the dollar heading into the beginning of this week. We are now, however, starting to see a reversal where the crude oil is down 3 to 4% in New York, and the dollar is back up above 90, trying to break out of a downtrending resistance line. So we may be under a situation now, even with this fiscal bill passing, because of especially this new strain of COVID coming out of the UK, Great Britain area, that the market may be more prone to profit taking going into the end of the year than maybe what we were expecting before the weekend news and before these delays with fiscal stimulus not getting passed here in the States. So I think the first 2 days of trade here in the United States are going to be very important, could give us very good indicators as to whether we have end of the year profit taking in both equities and commodities.
Yes, and another thing that I think probably will escalate, I'm not saying the word will be probably, but it has the potential to escalate, is about the trade. Because one new country that is a big commodity importer was tagged as a currency manipulator. That country is Vietnam, and I think that will be a major problem for the United States if there is trade frictions with other country adding to China.
Yeah, you bring up a really solid point for the farmer and the rancher, whether they're in the United States, Brazil, Paraguay, or Uruguay, or Argentina, or in the Baltic regions. The global farmer and the global rancher is probably going to have to contend with in 2021 the issue of trade frictions that continue. How much they have to deal with it, though, goes back to the weather. And I think that this is where, whether you're talking about China canceling soybeans, or you talk about Vietnam punishing or reacting with punitive uh, uh, claims against the United States, or whether you're talking about Brazil, who is looking to increase their beef export pace, in 2021 by some accounts, as much as 5 or 6%. All these things I think go back to the weather and go back to the grain weather, especially the grains and oil seeds weather. And if we have continued issues in Argentina, like we look and appear to be having, while Brazil's improved, Argentina has not improved it hardly at all, in my opinion. And we continue to see drought expand in the United States heading into our springtime and our planting. I don't think we have to worry as much about the trade frictions because there's just going to be less supply and there's going to be less competition around the world to go find another competitor or another supplier if you have a problem with a major country. So this is going to be really hard to navigate, and it's a big reason why I'm doing the sell and defend model, Luis. The droughts in these major producing countries can really change the markets for a time period and really change the politics as well. And you could have another food crisis like we had back in 2011, right before the 2012 drought in some of these third world poorer countries. And so we really have to be on our game, and we have to elevate our marketing plan in 2021. And I really like the idea of selling and defending. And I wished I would have done a little bit more selling and defending on the soybeans on my last sale, but we still have about 20% of our 2020 cash to sell in the for U.S. farmers here, and I'm only at about 35% sold for the new crop 2021 sales. So I've got plenty to sell, but you can see if I would have bought back some of my sales at say the 1140 area in beans, we're almost $1 higher than that in just 3 or 4 days. And these are the kind of markets we could look forward to if the weather continues to be what it is currently.
Yes, in another video, I interview a meteorologist from the state of Paraná, and I'm about to release this video. And she says that the soybean productivity will be recovered probably, but there will be a huge delay for the safrinha corn planting in that Brazilian state. So that adds for the corn upside.
Yes, and I think the other thing that's going to add for the corn upside is I'm starting to get survey. I sent out a brief survey this past weekend to my clients and subscribers in the United States, asking them if the price of soybeans at almost $11 in November 21 futures is starting to attract more acres away from corn. And so far, that is exactly what's happening. There are small incremental shifts being made right now with the price of new crop corn versus new crop beans being what they are. And if the soybeans continue on higher, I think you'll see a greater shift and not just incremental shift. So you also have the likelihood of a uh, reduced corn acreage base than what you would normally think heading into 2021 here in the United States. So my advice to a lot of producers, in fact, pretty much all producers, is with soybeans, if you're going to plant more, get them hedged early and have your profit locked in and do the sell and defend. And I think you could probably come in and sell the new crop November beans in the case of the United States producer, sell the July beans in the case of a Brazilian producer, and come back in and buy back in a March or a May option. And I think that would suffice for the reownership. You don't have to come in and buy all the time value of several months forward. At this point in time, I think you can kind of cut your marketing and your reownership in half and buy back in the front end markets now. And then if we see continued dryness this spring, go ahead and put some more into the new crop in maybe the February, March time period so that you don't have to buy all this time value out in the new crop right away.
Yes, it seems it's very crucial. If you can, please buy a grain bean.
Yeah, and the volatility remarkably is not that high for what we're dealing with almost 1250 soybeans at this point in the board price with Monday's rally. And that's pretty remarkable price. And yet our implied volatility is still in the low to mid 20s right now. And, I've seen soybean, implied volatility for calls and puts get into the 30s and, sometimes getting almost close to 40% is not odd on historical rallies. And so from an option buyer standpoint, the value is still there to go ahead and buy the options.
And what are you seeing on the wheat side in terms of the crop and in terms of the market?
Well, it's going to have to contend with the stronger dollar if we do have that reversal in the crude oil with the dollar, because the crude oil and dollar relationship, the correlation between the two, on a 12 or 18-week basis, is 80+%. So in terms of a negative relationship, so if the crude oil decides to go lower, that's almost going to force the dollar higher and probably force the Russian ruble and currencies that we normally compete with on the wheat market, force them lower against the dollar as well. But we're not seeing any improvement in the weather here in the United States, and we're seeing very light rainfall in the Baltic states. And so long term, I actually think the wheat is the best buy out there right now in terms of it has the least amount of weather premium in it, and it has the most upside potential if these drouthy conditions in both Russia, Ukraine, and then you add on top that the United States continue, because again, Argentina is not doing any better, and the wheat situation there is about over as far as them being able to do any better at this stage of the game. So globally, other than Australia and India is coming along a little bit better, but globally, we're still going to be on a tighter stock scenario, I think, as we see the January and February reports.
Yes, in addition to that, weather issues in Argentina, we have also a lot of logistical problems as the wheat harvest is about to finish with some strikes. And but on the other side, you mentioned Australia, and I would like to ask a little deeper about this country because it seems to be a little bit behind all of the huge demand that other countries are getting for any protein based product. Do you see it the same way?
As far as their ability to export, Luis, or what specifically are
Yes,
you mean?
yes, because Australia was heated in the trade war with China and exporting a lot less to China in recent months and years.
Yeah, I don't think they're going to have an excess surplus where they're going to compete too much with us in other countries. But here again, that's where Vietnam comes into play. They're in a very good logistical place, and if they have excess wheat, they could have if effectively compete with us very, very well in Vietnam, in Malaysia, in some of these other southeastern Asian countries. And then if India would happen and have an import need, or the Middle East would happen to have a greater import need, we may see Australia pop up more, but that would be more of a function of the Russian and the Ukrainian crops. But from my numbers, they're while they're rebounding in production, I think their excess or exportable supplies are still going to be on the low end of the 3 or 5 year average.
And with those vaccines coming in mass in many countries already, do you see better prospects for the livestock sector?
Well, I do in the second half of 2021. I think that if the grain prices continue to go higher and we continue to see the improvement from getting away from the pandemic, and we get back to more of a normal scenario of life and getting back into the restaurants here in the next 6 months, I think that that could be a real supportive feature for the livestock, because if we continue to have high grain prices, my livestock farmers are already starting to talk about that impacting their cost of production negatively. So at some point in the not too distant future, if we continue to go higher in grains, we'll see lighter weights in the global production for red meat and poultry. I don't think it'll just be here in the United States or down in Brazil. I think all of the world uh, livestock and meat producers will start to tighten up on their weights, because they're not going to make as much per animal with these kind of grain and oilseed prices. So that's good. You'll get more marketings and animals through the channel at lighter weights, so there's less production there. And then you'll naturally have more production declines or peaks in production as we get into the second half of 2021. Several countries need to retain more animals, specifically in the cattle. We still have a disease pressure issue for hogs since this winter, with some significant PRRS and some other viruses that are going around right now. So I think what I see, both supply and demand wise, is a better second half of 2021, but I'm still very worried about the first half of 2021. I just saw an article before you and I went on the air that because France is shutting its border with the United Kingdom, they're already starting to talk about potential food shortages in the United Kingdom because of transportation and logistical issues. So these are the kind of things that really drive food prices up. You can't meet your demand. And so then that once that demand is lost, it's lost forever. That's a key part of the analysis in agriculture economics, especially for animals. Once you lose your demand, it's lost forever. Either a competitor gets it in a competing meat, or the substitution effect comes in with something else. And you still got to market that animal without that demand being present. So I think this first half of 2021, I'm still more nervous about downside, especially since my April fat cattle, live cattle futures market got up to that 119 level last week before the cattle on feed report. That's my overvalue level, and I've made recommendations to go ahead and get 100% hedged in live cattle if feeder cattle don't have a good week this week.
Yes, and at the same time that there will be a lot of instability before we get everybody vaccinated, we have all sorts of different economic measures from each country. We talked here about Russia imposing export taxes on their farmers, but Ukraine is going to the other side, and they are eliminating VAT for soybean meal and other grain. So that brings more uncertainty to the market, I guess.
Yeah, it does. And I think this is where Ukraine and Russia are going to play a very big role in our price outlook in 2021, whether it's meats or grains, because they've been such a big source of supply for the Middle East and Eastern Europe and even into Asia. And if Ukraine has as bad of corn crop this coming year as it could, based upon how its drought is right now, it could actually fuel more upside potential for the corn market, and that would even make things worse for them, regionally, in terms of not getting a price break to be able to get their animals fed at lower cost of production. I'm a little dubious when it comes to Russia and Ukraine, when it comes to their policies, because they can change very, very quickly. One administrator or one head of an agency can say something and it hits the news wires, and then a week later, someone higher up than that says the exact opposite. And so that happens quite a bit. I would say Russia and Ukraine, I'm kind of putting them in a category of 2010 or 2014, where there are some issues there production wise, and inflationary pressures are great enough in those two countries. We just had the Ukrainian central bank, I believe, just last week came in and intervened in the currency markets because their currency was, getting too inflated again. So I think they're going to have to hold on to more supplies this year if the weather stays what it is now.
So again, you are recommending to sell slowly the stocks.
Yes, and I'm getting more and more of the mindset that the sell and defend model is going to be the best way to get producers to lock in good profit without them getting too bulled up and thinking it's going to be a 2012 or a 2008 market again. Try and let them participate some in that kind of a market potential by a reownership strategy, and in that way not have to fight the psychology of the trading and the psychology of the hedging, and essentially do what I did in 2020, where if I buy puts for the second half of my marketings to protect the downside and I'm wrong by that, I'm hoping to make at least twice that on the cash sale in corn and three times that in the beans for my cash sales. So if I can do a 2-to-1 risk reward ratio in corn and 3-to-1 in beans, I will call that a success in terms of marketing. And I will continue to start and press harder with the soybeans, because the profitability here in the United States is really good as we get to that $11 new crop soybean price.
I wish you a Merry Christmas, sir.
And to you, my friend, Merry Christmas to you and all the great listeners out there.